Hello and welcome. Welcome to 96th session of the monthly learning series. And this session is more prominent for the GST annual returns, and this is an exercise one has to do every year. The more importantly, there has been change in the GST compliance per se. GSTR 3B got changed from July 22, wherein they've introduced the temporary reversal. Then we suddenly started seeing electronic credit reversal and reclaim statement. And we now see IMS. Now, in midst of all this, the accountants keep changing. The, the only constant is the change, right? Change is constant, it keeps changing. People change, policies change, procedures change, many things change. Now, special thanks to Stephen and Ashika who continuously ensure that we have the knowledge sharing session. My name is Venugopal and I am the moderator speaker of the day. With me, we have two speakers who will be taking different parts of the session. Welcome to the GSTR 9 series. Let me give you some of the housekeeping things. First, in the interest of everyone are muted. You can put your question in the chat. You can raise your virtual hand. We will unmute you and you can ask. This session is no technology. The entire series, entire whole of the session, we are going to talk about GSTR 9 and 9C. So it will get bored. Now find a way to catch yourself to listen to me and Ashika whole of these 3 hours. Second, we are going to use different jargons. Jargons as in no Latin words, no legal maxims. But we may say 4B1, we may say 4G, and suddenly it is like when I say 4G, I'm talking from GSTR 9, 4B1, I'm talking from 3B. We've been used with this terminology, so we may get like, we'll try catching ourselves and to be very detailed. But if you are stuck somewhere, do let us know. Keep with you the following things handy. The sample format of GSTR 9. Like you can just download it from the government portal. You log in. There is a GSTR 9 pre-filled for all of your clients. A PDF is there. Print it and keep a copy with you right now. Print a copy of GSTR 3B. Print a copy of GSTR 1. Keep these three handy. Whatever we are discussing, make your notes on the document. Just make your notes. Yeah. We will share you the PPT, but what's more important is keeping your notes with you. We have created a lot of scenarios, which we will be explaining in the course. If you have any scenario which is not covered, feel free to ask that. Use of technology is an essential evil, necessary. You can't escape with it. Why you have to use the technology? There's so much reconciliation, so many counter tables that we will say match this with this, match this with this. Like you need to have all the data ready. It may simple appear that, okay, why is it so complicated? One sales register, one purchase register, a pivot of it, will it not suffice? Of course, that would suffice. But if I have to say sales register, I will say the sales register by place of supply. Like how much is CGST, how much is IGST. I will say sales register by type of supply. I like how much is B2B, B2C, how much is exports, and in exports I'll say with pay, without pay, how much. I may say your sales register by rate of tax. How much is 0, 12, 18, blah, blah, blah. I may say your sales register by HSL. Now you will say that Look, my sales register have all this. Whatever you ask, I'll put a pivot and keep changing. Very good. That is what you have to build on. So from your SAP or whichever is the accounting software, get the detailed sales register. The only challenge is that damn sales register doesn't match stock with GSTR1. So we will say that have a reconciliation of that with GSTR1. Then we will say that the same thing just match with what is that you reported in table 3.1.1 or 31A, 31B, or 31C of your GSTR 3B, right? Of course, 31D is your RCM. So now all these reconciliations have to be ready and handy. That is what is required. Yeah. We may not do it right now. In the next session, we will try doing a practical workflow of one GSTR9, which we will be walking through with the numbers. Today's session is understanding of the form. We will understand context of the annual return, the necessary rules provisions. There is a change that happened in the current year. We will look at all of that and we will be talking. Yeah. With this opening remarks, let's start this session. Ashika, over to you.
I hope screen is visible.
Yeah.
So today, as Sir said, we are going to start with the understanding of the form. Now, over here, the first thing what we have done is why we choose understanding of form instead of starting with the working. The reason is if we don't know what a form is asking, how we will do our working to fulfill all the details which is asked in the form. That's the reason this month's session we are focusing on what are the changes in the form and what are the data you require to be kept handy in order to fill this form. And in our next session, we will be doing about the workings which need to be done in order to derive these figures which need to be filled in this form. Our flow of session will be in this fashion. First, we will understand the legal background, the forms, various table, plus what are the reporting changes and how to deal with when there is a spillover of the transaction. Means 23-24 transaction having impact in 24-25. Similarly, 24-25 having impact in 25-26. So if any previous year impact coming in current year and current year impact going in subsequent year, how to deal with those spillover transactions and how the same comes as a reporting in GSTR 9 and 9C. So first starting with legal provision. Now it feels like what to read for legal provision. We all know everybody has to now file the annual return. Is it everybody or only a regular taxpayer is required to file the return? That understanding need to be clear because it's not the case that each and everyone has to file, and it is also not the case only a regular taxpayer has to file. If you will read the provision, they have given an exclusion for ISD, TDS, TCS, CTP means casual taxpayer person, NRTP non-resident taxpayer person. So only these persons are excluded from filing the annual return. Apart from this person, all other persons are required to file annual return. So now the question arises, which are the other person who falls under annual return? We know about the regular taxpayer. Apart from regular taxpayer, who are there? Composition taxpayer. So the person who has opted for the composition scheme, they are also required to file the annual return. But the problem is, though there is a specific form prescribed under the law, which is 9A. However, same is still not operational, and the annual return which actually composite dealers are filing is GSTR 4, which they file after the year end. Another form annual statement which they have prescribed is 9C, 9B. 9B, which deals with the e-commerce operator, the person who are into e-commerce operator and are deducting TCS. They are also required to do annual statement. But again, same situation. 9B is also not operational. So at the end, we came back to last is only regular taxpayer person who are required to file Form GSTR 9. Now, with 9, there is also one more form, that is 9C, reconciliation statement. The way the threshold limit they have prescribed in the preceding financial year, same threshold limit they have also continued for 24-25 also. So again, if your turnover is below 2 crore, they are saying it's an optional. Above 2 crore, then 9, and above 5 crore, then 9 and 9C both need to be filed. Here, with threshold, one more thing want to bring into your notice is we always have a tendency of interpreting this threshold as a taxable turnover. That you people have to keep in mind. Threshold is not determined based on taxable turnover. It is determined based on aggregate turnover. Similarly, the way we use for GST registration. Like GST registration is also based on aggregate turnover. Similarly, for 99C applicability also, you have to check aggregate turnover. It may be a case your taxable turnover may be below 2 crore or below 5 crore. But if in totality, your audited financial revenue from operation is above 2 crore or above 5 crore, as the case may be, you have to file your 9 or 9C as may be applicable. Now, with this understanding, we'll move forward to the about the difference between 9 and 9C. For this, I will like Venu sir to take this part of the slide.
Yeah. We have GSTR 9 and GSTR 9C. Now, GSTR 9 is annual return. GSTR 9C is reconciliation statement. Earlier, we have section 44 read with 35 updated, which said that the reconciliation statement should be audited and certified by a chartered accountant. So, reconciliation statement is what is some reconciliation is always between two things. Like with the, what we do, ITC reconciliation, what is there in 2B versus what is there in books or what have we claimed. So 9C reconciliation statement was to be certified by a chartered accountant what client has declared. Declared where? In the annual return. Okay, to be compared with what? Books. Now the next question comes is then what is annual return? Isn't it what which is coming from the books? Now, if the annual return is coming from the books, the question that would come is then is this different from GSTR 1 and 3B? If annual return is the consolidation of the 12 months R1 and 3B, let's look at this way. If the annual return is consolidation of 12 months R1 and 3B, R1 is there with the government, 3B is there with the government, then why at all should be GSTR 9? If it is R9 is sigma R1, that is 12 months R1, sigma 3B, 12 months 3B, then why at all R9? The data is already there with the government. That is where the context of the annual return comes into the picture. The context of the annual return comes into the picture. Now, when I say the annual return context, let us understand that the two terminologies which I have listed here, what is done. Second one is what should be done. What is done versus what should be done. When we say what is done, you have one thing which I am saying. When we say what is done, I'm not getting 1 minute. Let me see if I can use whiteboard and show it. All right. So when we are saying GSTR 9, it is sigma R1 plus 3V. So 12 months R1 plus 3V is your GSTR 9. Your 9C is your books. Whatever you have done in books, your books versus GSTR 9. Now, if it is that simple, if this is that simple, it is just 12 months R1 plus 3B, then why at all we need GSTR 9? Now let's understand the challenges that are going to come in my 3B or R1. We all know that R1 is your sales register, right? And you expect R1 plus 1A, any amendment goes to 3B. That means 3B is more like a liability final. Can R1 be 100 and 3B say 105 or 95? Possible. Errors can happen. R1, I will say export without pay, but in 3B, I will say export with pay. Possible. I can always forget reporting in R1 and I report and pay in 3B. What? When 1A being there, is this possible? Now, as long as 3B is not frozen, it will be possible. Now, in financial year 24-25, 3B was not frozen. Yeah. By the way, Ashika, whatever I am writing on the screen, is this visible to all?
Yes.
All right. Okay. So that means in R1 something gone wrong. Very common times. You made a sale, you reported in R1 as B2C. 5 months later, customer came back and said, look, my GST number was not updated by you, please update. You converted B2C to B2B. The possibility is you have done it in R1. Now, how will you do it? You would have done in table 10. In your table 10, B2C value you have reduced, and table 9, you have added the B2B, or you will not even add in table 9, you will be doing in table 4, added new B2B. Now, this correction you could have done in April of this year also, or March of last year also. It could have happened. You have the HSN wise reporting in table 12, right? This became mandatory only in recent days. You could have made a different number reporting in the HSN. Right now, I'm only talking outward, your R1 related. I'm not even coming to your ITC. ITC has more complications. Now, anything could have happened. Anything could have happened. Now, how will you communicate to the government saying that, okay, so much has happened, let me now correct it and say, I would have reported in my GSTR 1, in my GSTR 1, 100 rupees, while my book liability is 140 rupees. I would want to now disclose that. So R9 is the last option, to disclose. Now, when we say option to disclose, I have initially said R1 GSTR 9 is sigma of 12 months. Now, if R9 is sigma of 12 months, how can we do an additional disclosure? The government perspective, GSTR 9 is a statement of what happened. If I have to say GSTR 9, it is called a statement of what happened. It's purely a statement of what happened. When we say what happened is the taxes paid, you will only talk about taxes that are paid in GSTR 9. Now the paid could be, you could have paid through any of it. You could have paid through 3B or DRC03. The payment could have been through 3B or DRC03. But you are only now talking about the taxes that have been paid is what you are talking in your R9. You are not talking about taxes payable. What comes as a difference here between 100 and 140? Between 100 and 140. What goes to GSTR 9, please listen carefully, is what happened. What goes through GSTR 9 is what happened. For a moment, let us assume your R1 and 3B is matching. So what is paid is 100. What is paid is 100. So what goes to your GSTR 9 is this 100 goes to GSTR 9. Now, but my books has a liability of 140. Let's say my books have liability of 140. For this 140, the liability which is there in the books, let us say paid through DRC03, paid through DRC03, let's say 30 rupees. You have paid through DRC03 30. So what goes to R9 is you have paid through DRC03 30. Even this you will disclose in your GSTR 9. That means GSTR 9, the way you will have to read it. So what is GSTR 9? GSTR 9 has to be called as GSTR 9 is statement.
Mute my audio. I have to put it. Mute my audio.
Yeah. So GSTR 9 is a statement of fact. You will be writing what has happened. In GSTR 9, you will be disclosing what happened. The happened could be the actual taxes paid in 3B or through DRC03. So the context of GSTR 9 is you are indicating to the government that you have paid the taxes. Now, in the current case, you have paid a tax of 130 rupees. You have paid a tax of 130 rupees. Now, the challenge with this 130 rupees. Now, let's look at what is the challenge with this 130 rupees. In this 130 rupees, 100 is clearly from R1. You have the bifurcation of B2B, B2C, export 5%, 12%. But the 30 that is paid through DRC03, where is the bifurcation? You don't have that. So
from your mobile. No,
Stephen, can you mute others? Let me, in the interest, I'm muting all. Yeah, you can raise the hand to unmute yourself. Okay. So now if you see GSTR 100 has a full breakup, while the 30 additionally paid has no breakup. Now in GSTR 9, you are going to explain to the government this 130 belongs to what? Is this belongs to your forward charge liability or a reverse charge liability? This is what you are going to explain. You are going to explain if it is a forward charge liability, how much is your B2B, B2C, all those thing, export with pay, all those classification you will be explaining. You will be explaining how much is this is 9% CGST, SGST, 2.5% CGST, SGST, the rate of taxes. You're going to explain in all respects. Yeah, you're going to explain in all respects. So what has happened is now you are newly explaining. What has happened is now you are newly explaining. So GSTR 9 has to be called as statement of fact. Statement of fact. Now there is another dimension to this statement of fact. There is another dimension to this statement of fact. What is this dimension? Now, this 130 could have been paid in 24-25, or it would have been paid in 25-26. Now, many things, many people who don't know is this could have been paid even in 23-24 also. Some portion of it would have been paid. This 100 rupees which is paid in R, I said R1 and 3B are matching, it could have been paid in 23-24. How can someone pay a liability of 24-25 in the earlier? Who knows? In March 3B, I have erroneously paid more tax. In the month of March, I have erroneously paid more tax. So if I have paid more tax, I would be looking at how do I adjust that. So in my GSTR 9, I am also going to explain if this is my liability I have paid, how and when did I make the payment? That is what I am going to explain. So I am going to explain how much I have paid, for what I have paid, how did I make the payment. So let me repeat these three things. In GSTR 9, as a concept, I am explaining how much I have paid, how did I make the payment, for what I have made the payment. How much I have paid is a statement of facts 3B or DRC03. How did I make current year, last year 3B, all summation. For what did I make a payment through B2B, B2C, all those aspects, right? Are we clear with the concept of GSTR 9 with regards to outward liability? Is this clear to all? If it is clear, please put it as yes in the chat. If you have any doubt, you can put it as, put your question. All right, I can see 3 people saying yes. Manjunath, Sai, Rajat, Ashik, Kiran. Pretty good. I would want a response because this is a virtual session. I really don't know whether you're getting me or not. Perfect. So let me erase this screen. Sneha, you got the outward detail. No RCM. Perfect. We'll go. I'm only right now explaining concept of R9. Contextually, what is R9? I'm explaining. I haven't even gone anywhere. Now let me go back to the screen. Let me clear this drawing. So what did I say? The R9 is a statement of what is done. R9 is a statement of done, what is done. So how much turnover on which the tax has been paid is only what I am talking in R9. Now let's look at what is 9C. If R9 is this, what is 9C? 9C is talking about what should be done. Now the concept of 9C, the brought in is from the auditor or an external perspective. Concept is from auditor or external perspective. Let's now understand what is 9C. Now, what is the taxes I should be paying? Like, let's understand what is the tax that I have to pay to the government. By the way, can anyone answer a question? What is the tax that one has to pay to the government? Any answer to anyone? Anyone have any answer to say? What is the tax I have to pay to the government? You can put it in the chat. It sounds like a stupid question. No, it's very important. It's like the more you answer, whether right or wrong, the more you answer, it gives an understanding to think. Let me explain. Now, what is the tax that you need to pay? Or in a simple way, if I have to tell you, you may say whatever is the cash you are discharging month over month, right? Whatever the taxes paid in cash month over month is what you are paying. But how is this coming? How is this derived? Your liability minus ITC, isn't it? The tax that you are paying is your liability minus ITC. Now, if I have to tell you how is your liability derived? How is your liability derived? Your liability is your turnover multiplied by rate of tax. Your liability is turnover multiplied by rate of tax. And how do you get the turnover? Your turnover is always the total. When we say turnover, we are saying taxable turnover, right? And how do you get it? Your total turnover minus exemptions. This is how you will get your the turnover. This is how you will derive your liability. So the liability to be paid in cash month over month is derived in this fashion. Now, where do I get the turnover, taxable turnover, total turnover? From where will I get? I will be getting, strictly interpreting, I will be getting from section 12 or 13, which otherwise we call it as time of supply, Now, how do I get it? I would be getting it from my books of accounts. Now, there is a difference between the revenue in the books. So I will say my book turnover minus adjustment, books turnover minus adjustment will be my GST turnover. It would be my GST turnover. That means we are now trying to derive what is the turnover on which the GST is applicable. So, basis the GST, the tax is applicable. So, we are saying what is the turnover on which the GST is applicable, tax is applicable. So, this is one set. This you can call it as set number one. And 9C is what? Reconciliation statement. Reconcile with what? This is reconciled with the transaction that you have already done, which is completed, which is the statement of fact. So in terms of the, so this is one versus your, so if I have to, sorry, let me clean this, one versus two. So the one was a derivative number. One was your derivative number, and two, I am saying what is done. And when we say what is done, we are saying GSTR 9. So that means your 9C is what is that you should be doing. GSTR 9C is what is that you should be doing versus what is that you have done. So 9C is what you should be doing versus what you have done. Is the concept of 9C clear to all? So far, have you understood what is 9C? Is the concept clear to all of you? Only to Gunashekar? For others, you didn't understand what you didn't understand. Okay, I can hear one yes from Arun Kumar. Rajat saying yes. I can see Akshay, Ashok, Chandra, JR, Karthikeyan, Kiran, Prabhas. Various people are there. Ravi, Ronak. Perfect. So I have substantial people said yes. So, sorry, I think this went off. So, your GSTR So if you look at now, the context of the annual return is what is done. Context of reconciliation statement 9C is what should be done. It is the turnover on which the tax is payable compared with the turnover on which tax is paid. So this is a statement of fact. This is what ideal situation is. I will come to ITC as we deal with, but I want to get the concept. We finance professional, if I have to talk in a financial language, this is your P&L account. This is your income and expenditure account. This is your income and expenditure account. This is your bank statement. This is like, sorry, my bad. Let me just correct this. This is your R9 is your bank statement. This is a statement of fact. This cannot be changed. Like this is the reality. You paid, received. Your 9C is your P&L account. Your 9C is your P&L account, where you are saying that this is what my profit is, or this is what my income expenditure is. So something like that, right? This is a statement of fact. GSTR 9 is statement. Like I've been using this word, you may say, is it 9C is not a statement of fact? 9C is having a derivatives. Okay, this should be, this should have been, this should have been, this is how it is, right? So what I have done is GSTR 9. What I should have been done is 9C. Whatever I should have done, I would have done it, or I wouldn't have done it. I wouldn't have done it. Now, both are being filed by the SSC himself, right? Now, if GSTR 9 also I can pay through DRC 03, why will someone use 9C? We never know. Maybe at a different point in time, government may say people above so and so class turnover 9C can be self-certified, 9C can be chartered accountant. We never know. But identify, understand conceptually this. Most of the people, if I have to pay through DRC 03, some missed out taxes have to be paid. I will anyhow pay it in GSTR 9. That's how it is. It's like, can I pay it in 9C? Yes, you can pay it in 9C. What is the difference? It is like you are booking a movie ticket either in Book My Show or you're going to theater and taking it, right? Both are kind of one and the same. Any questions to anyone in understanding the difference between GSTR 9 and 9C? Any questions? Hello? Why 9C is income and expenditure account, Chandra? Because it is like P&L. You are deriving what should have been your turnover. 9 is like bank statement. I would have actually received the money, received in advance, whatever it is, statement of. It is like, it is not. Yeah, just giving an analogy. Any other questions to anyone? Okay, I would presume no questions, but even that I would want it as an answer like, okay, no questions, please move on. Unless you say move on, it is like it would be difficult for me to get whether you're getting it or not, because we are here to understand whole of GSTR 9, whole of GSTR 9C. But unless you don't understand the concept, then you'll keep thinking that, okay, why am I doing here? Why am I showing here? Why am I not showing in other place? So can I consider that you all of you have understood? If yes, please put it as yes in the chat. Thank you so much. Lovely audience. Over to you, Ashika. Ashika, you're on mute.
As we understood the context behind GSTR 9 and 9C, let us move forward with the understanding of form. So, if you will see GSTR 9, Before we move to 1-1 table, what data you need to fill? First, let us understand is the break of this form. So if you will see GSTR 9, there are total part is 6. There are 6 parts and 19 tables in this GSTR 9. Now, this table, the way it is designed is very beautifully done, like the way the sir explained that it is book turnover. From that, we came to GST turnover, and from GST turnover, we came down to taxable turnover, basis on which we discharge our GST liability. The way the form 9 and 9C has been designed is keeping in mind the same thing. So from part 1 is a basic information which generally deals of the SSC GSTN number, name, and your which year for which you are filing the GSTR 9. Part 2 of it deals with the liability, table 4 and table 5. Part 3 deals with input tax credit, where there are 3 tables, 6, 7, 8. Part 4 is a tax paid detail, which is basically a comparison between tax payable versus tax paid, which is dealt by table 9. Part 5 is the table which deals with 24-25, any rectification, error or omission you have done in 25-26 that need to be reported in part 5. Part 6 is an additional information which does not deals with the liability but the reporting purpose. Like if you have any demand notice, you need to report. If you are claiming any refund, you have to report about the refund. Then comes 2 tables of HSN reporting. One is outward HSN reporting, one is inward HSN reporting. So part 6 is basically a information disclosure, nothing to do with the tax liabilities. Now, if you will see over here, from part 2 to part 4, this part 2 and 4 deals with the data which you have furnished in 24-25 for 24-25. Part 5 deals with the data which you have furnished in 25-26 but pretend to 24-25. So you have to keep in this mind the way the form has been divided in order to consider all the reporting which you have done in R1 and 3B. So from part 2 to part 4 for what you have reported in 1 and 3B in 24-25. Part 5 deals with what you have reported in 25-26 but pertaining to 24-25. Obviously, part 5 reporting, there are a time limit, which is October month is the last return to rectify any error or any omission you have done in 24-25. So if anything you have identified, you have still time because GSTR month is 11 and 3B is your 20. If any of the error you have done, which we have obviously discussed in our last session, and if reporting you are making till October, you need to disclose in part 5. Similar.
Ashika, yeah. So this slide is very important, everyone. Maybe you can make your notes, screenshot, whatever, because going forward, we will be talking about table 4, 5, 6, 7, then specifically 4F5, F4G, all those things. It's very important that you understand the table, if not part, the table number is very important because whenever you ask me a question, where should I report? I would say, okay, this should go in your 4C or I'll say 5A. So you need to quickly understand, okay, what is 4C, what is 5A? You should be able to correlate the things. So having known the table numbers are more important. So pretty simply, for a simple form, divided into 6 parts. Part 1, basic information. Part 2, outward related. Part 3, ITC related. Part 4 is after outward and ITC. Part 4, obviously the taxes paid and payable details. With ideally the form should have closed with this, but Ashika rightly said something of the previous year spilled over to the next year, and you want to give the reporting adjustment of that is the part 5. Government want other information, miscellaneous information from carrying from table 15 to table 19. It's in part 6. Yes, Ashika.
So the way we discuss about GSTR 9, similarly 9C is also divided into 6 parts. Similarly 9C also have a 5 parts and 16 tables over here. So if you will see again here, like similar to GSTR 1, part 1 consists of basic information. Part 2 of 9 like deals with outward tax liability. Here part 2 of 9C deals with outward turnover value. So over here we are driving our taxable turnover from books turnover, and in 9 we are driving the liability on the turnover we have reported. Part 3, again, it is a tax payable versus tax paid, which we have dealt in part 4 of GSTR 9. Here also in part 4, tax payable versus tax paid is captured. Here also in part 3, tax payable versus tax paid is captured. But the only difference is when you report in part 4, it is at a summary level. When we report in part 3, it is rate wise. So over here, we have to disclose our outward turnover based on the GST rate applicable. So which also give an insight to the officer, what is the rate you are charging and whether your classification is correct or not. And that classification also helped from part 6 of GSTR 9, where there is specifically HSN reporting table 17, which deals with outward HSN reporting. So what you report in table 17 as HSN, they will see based on that classification, rate is correctly applied or not. So if you will see the way it is designed, there is a correlation, and it also helping the department to check the liability drive by you is correct or not. Part 4, it deals with input tax credit. Here it is basically a comparison between books, ITC, what you have recorded and what you have reported in 3B. But if you will see here, the ITC part 3 in GSTR 9, it basically deals with what you have reported in 3B. And this is a comparison between books and 3B in GSTR 9C. Part 5 is an additional liability. If suppose, like the sir explained about the 9 versus 9C, that 9 is a statement of fact and 9C is what you are actually liable to pay. So if there is a difference between what you reported and what you are liable to pay, that additional liability you will disclose, you can disclose here and pay through DRC 03. So with this basic understanding of the table.
Ashika, just previous slide.
Yeah.
Okay, now again, if you pay a close attention to this slide of 9C, which I said about what is 9C is reconciliation between the books. 9C is the reconciliation between your books and your R9. And I have explained how R9 is compiled from Sigma R1 R3B, and 9C is compiled with from the books, the section 1213 compliance, books versus adjustment. Let's look at a close again. It may, for the first time, it will appear to be difficult. Look at this, like how you have the 6 parts. The main important was part 2, 3, 4. Part 2 was in R9, part 2 was outward, part 3 is ITC, part 4 was tax payable and paid, right? That is in GSTR 9, from table 5 up until table 9. Now the adjustments also, correct? Now let's try to correlate this table 5 to table 16 the way I have explained earlier about the 9C. Let me again just show it with you diagrammatically. Now what we said, the tax paid, so tax paid in cash is equal to liability minus ITC. This is what we have discussed in the earlier side, right? And don't go with my English, that's okay. So how do you get your liability? We've said the liability is turnover multiplied by rate of tax. So we said the liability gets derived turnover multiplied by rate of tax, and we said the turnover means We said the turnover is whatever we are saying turnover, it means taxable turnover. The taxable turnover means your total turnover minus exemptions, right? This is what we have said. And in the screen, the earlier screen, what we saw in the earlier screen, we have seen, like if you look at it, I said pay a close attention to table 5, 6, 7, 8, 9, 10, 11, 12, 13, 16. Let's understand these tables linking with the screen that we have seen. Now, government wants to understand what is your total turnover. So your total turnover is in your table number 5 of 9C. Now, so that means the 5 value is coming from the books. I said 9C is a reconciliation. Reconciliation of what? Reconciliation books versus GSTR 9. Now it will match, it may not match. If it is not matching, then you will give a difference in table number 6 of 9C. What you are seeing is now 9C. So in table 6 is the table 5 turnover versus GSTR 9 turnover. The differences are explained here. But what are we interested? We are always interested in taxable turnover. So to get the taxable turnover, I have to eliminate the exemptions. So the exemptions, I will give it in my table number 7. If there are any differences with GSTR 9, I will explain in table number 8, right? But what I'm actually interested, I am interested in finding out my total liability. Yes, I have derived my turnover, but the total liability is going to come from rate of tax. I have disclosed a turnover of 1 crore in GSTR 9. 1 crore is the turnover for books of accounts. You may say that, oh, perfect. He is the Superman. He has done everything properly. But that 1 crore, I would have paid tax at 5%, while my tax should have been at 18%, right? So this turnover, which we have derived, the turnover which I have derived here might be matching, but now I have to segregate this turnover into rate wise. This segregation I will do in table number 9. The segregation I will do in my table number 9 of 9C. This derived segregation in table number 9 of 9C, I am going to compare, and I will be going to report if there is any difference between 9C derived turnover and 9C derived tax liability and 9 reported tax liability. That I will explain in table number 10. Owing to these tables, owing to all these adjustments, if there is any liability that I have to pay, I will be paying in table number 11 of 9C. So that means the form has been designed chronologically to explain the difference between the books and the difference between GSTR 9. That is why I will say GSTR 9 is a statement of fact. GSTR 9C is what I should have done, and comparing the what I should have done with what I have done is your GSTR 9C. Is this explanation clear to you? Have you understood about GSTR 9C, the tables and kind of correlation? We'll anyhow get into the details of it. Today's session is we'll get into the details of it. Perfect. So I can get some, yes. I would request that HP, please rename yourself. Calling yourself as HP is like odd for me. Yes, Ashika, over to you.
So as we understood about the forms parts basic before we start into what need to be filled in the form, these are the data you have to keep handy in order to fill your 9 and 9C. Obviously, first is the primary information which you will be always keep with yourself in order to do 99C. That is your 1, GSTR 3B, audited books, and 2B. But with this, you need additional information also. Like we talk about part 5 of GSTR 9, which deals with 24-25, any adjustment done in 25-26. So therefore, I also need next year GSTR 1 and 3B to verify if any adjustment I have done. One. Second, it may also be a case that 22-23, any adjustment I have done in, 23-24, any adjustment I have done in 24-25. So I also need GSTR 9 of last year, because if I have done any adjustment, like I'm reporting for 24-25 in part 5, similarly, I would have reported in part 5 of 23-24 also, which will help me to drive my correct tax liability for 24-25. Then any payment I have made through DRC 03, because as Sir said, when we do GSTR 9, table 4, it not only dependent on the fact of what I have paid through 3B, but it also include payment made through DRC 03. So that also need to be reported in GSTR 9. So if any payment done, that is also required. Then the other two, which is mentioned, is about demand notice or order or refund claim, is an additional information, though optional, for reporting in GSTR 9, but this additional information will help you to identify if any lapses are there. See, when we start with our 9C, we have to identify what is my book turnover. Out of that book turnover, what is my GST turnover? And after coming to GST turnover, what is my taxable turnover? It may be a case from prior audit, from previous audit and all, you would have come about any lacuna or any lapses, maybe in ITC or in outward tax liability, which you can take care while filing your 99C for the current period of 24-25. If any error is there in 24-25 or in any liability has got skipped from the assessment. So these are the data you need to be kept handy. Now let us go one by one with how to fill the tables of GSTR 9 and 9C. Now the first thing, if you will notice over here, is we are starting with outward supply. In case of outward supply, the first thing which we need to do is drive our GST turnover. Now it need to be understand there may be a multiple reason that my books, what I have recorded as revenue from operation in my audited financial, may not match with what I have reported as a taxable turnover in my GST return, or it may not be equal to GST turnover. When I am using the word GST turnover, I am not limiting myself to taxable turnover. It include taxable, exempt, and non-GST supply. So GST turnover consists of all these three items. As the government also know that there can be a multiple reason of difference between books and the turnover as per the GST. That's why in GSTR 9C, they have incorporated this number of line item from 5B to 5O to incorporate what could be the reason for the difference between books and GST. Now, we know that books is prepared based on accounting standard and Ind AS. And GST turnover, as we discussed, it will be derived based on time of supply. Both of them decide their turnover in a different manner. So let's start one by one, like 5A. So over here, obviously, we will fill what is my revenue from operation at GSTN level. So if you are a multi-GSTN, you will not fill your revenue from operation as per the financial here 100 rupees immediately. If you are multi-GSTN, you have to divide your 100 based on the GST turnover. If one GSTN is 70 and another is 30, here you have to report only 70 rupees, not 100 rupees. And obviously, while uploading through 9C, we have to upload various documents. One of this document is turnover certificates. So in turnover certificate, you will give your revenue from operation bifurcation into GSTN level. and where you will be specifying that this GSTN is 70. That's why 5A is starting with 70 rupees. 5B, unbilled revenue. Now we have a UBR adjustment. Based on a matching concept in audited financial, we generally book our income. But until and unless that income is materialized, means that income get accrued based on the agreement entered, the same will not be invoiced, and until that GST liability will not come just because you have created some provision of income in your books. So just because you have recognized unbilled revenue, which has increased your revenue, but from the GST point of view, same will not be regarded as a revenue as time of supply has not come. So that's the reason UBR adjustment has been specified. In service industry, it's the most common which is going to come. So if anything of unbilled revenue you have recorded in your audited financial, make sure to take impact of it. So beginning of the year you have to add, which is covered by 5B, and the ending of the year you have to reduce, which is also covered over here in 5H. Coming to advances. Now advances is also your balance sheet item. Like UBR is a balance sheet item, advance is also a balance sheet item. So PL will not have the impact of it. But when we come to GST, specifically under service, it is said that in case of service, on receipt of advance also, I am liable to pay GST on it. But as it is an advance, my income, it will not hit my income as per the accounting standard. It will be parked in balance sheet. But as under GST, I have to pay the taxes on it. So I have to take impact to drive my GST turnover. So therefore, the 5C deals with unadjusted advance at the end of the financial year, which I need to add. Similarly, which is a opening unadjusted advance is dealt by 5I, which I have to reduce. So basically what is advance received during the period is taxable. So that is what you have to offer and do the adjustment in your audited financial income in order to drive the GST turnover. Another line item which you will find is deemed supply under Schedule 1. This most commonly comes under multi-GSTN case where there is a stock transfer, cross charge. So as it is Schedule 1, as we know that it consists few activity as a supply under GST, even though there is no consideration. But I am discussing, though there are 4 specified, but I am discussing about the transaction which is more generally is going to come. Now, if we see stock transfer, at pen level, it is never an income. Because for one, it is a supply, for another, it is a purchase, therefore netting it off. So this deemed supply of stock transfer is never recorded at pen level revenue. But for GST is a specific item which has been brought under taxability. So you need to report separately under 5D. And similarly is the cross charge transaction also. If any ITC you have cross charge to your other GST, that will also not form part of your 5A revenue, but you have to separately add it to 5D as a deemed supply under Schedule 1. 5E doesn't come generally, so I'm not discussing. 5F is your trade discount. So if there is any trade discount which does not comply with Section 15, to have the benefit of discount, it is very important that it should be in compliance with Section 15, which says that you should be knowing about the discount at the time of entering the contract or agreement, and it should be separately identified, means against which invoice you are giving discount. Now, this discount meaning has got changed. Now they have amended Section 15, but prior to this, because that amendment will be happening now, so it is 24-25. So you have to check any discount which is not in compliance to Section 15, you have to add it here separately. 5G is no more relevant because it was specific to 17.8. 5H and I, we have already discussed. 5J, it's related to credit note, specifically financial credit note. Now, credit note which is not in compliance with Section 34. So what can be a credit note which is not in compliance with Section 34? Like most common habit of us is raising a credit note against bad debt, which itself is wrong. It should not be done because credit note has only in three circumstances it can come, where you have charged excess taxable value, or where tax rate is wrongly charged, or where there is a deficiency of provision of service or return of goods. Only in those circumstances credit note can be raised first. So if there is credit note which does not fall under these three situations, then it will be a financial credit note. One. Second, time barred credit note means credit note which is issued beyond due date. Like for 24-25, 30th October is the last date to raise credit note against the invoice which has been raised for 24-25. So if any credit note which is beyond October 25, you are raising for 24-25, then it will be a financial credit note and it will be reported here. Then your adjustment on account of supply of goods by SEZ unit to DTA. Now supply to SEZ is an export, but from SEZ to DTA is not considered as export or import. So over here it is considered as import by domestic tariff unit. So if you are an SEZ unit, then you have to report over here. If not an SEZ unit, it will not come. 5K is not reportable. 5L, if anybody was in composition converted into regular, then 5L will come. 5M relates to section 15. Now there are certain supply for which there is a separate valuation mechanism prescribed, like air tickets. For air tickets, they have been given an option. They can charge on a domestic base fare 5%. So though my turnover may be something else, because I might have booked as a total value of 100, but based on a ticket base fare, I'm charging and discharging GST. Then obviously 5M adjustment in turnover will come. 5N forex exchange, if anybody is into export, then only it will come. If you will notice, while finalizing our audited financial, we recognize forex gain or loss. That is what to be reported in 5N. 5O, if none of the above, if still there is some adjustment left which does not come from 5B to 5N, last option is this residuary option 5O. What example I can take? One classic example is sale of fixed asset. Now, if we see in balance sheet, what we record profit and loss of fixed asset. We don't record sale value. But when we have to discharge GST, we have to discharge GST on sale value of fixed asset. In 5O, profit on sale of fixed asset will be reduced, but sale value of fixed asset, which I am going to pay GST, will be added. So 5O is a residual where you don't fall in this. Now I discuss about B, C, D, E, F, all what are the things there. But as per the instruction, all of these tables are optional. So option has been given whether you want to report separately or you can report all this thing at one, that is 5O. But the way now department has also become educated. It has been 7 years and 7 GSTR 99C have been filed. So they also know what adjustment, what you are doing. And to avoid litigation, it is always advisable to fill the specific tables, whichever applicable to you, instead of opting for optional field, because it will also give you clarity. Now we are standing in 24-25. Who knows when the audit, because they have a 5-year time limit under 74A. So 5 years and 3 years time limits are there. So huge time limit. Today, while working, we may be knowing what add minus we did. But when the audit comes, maybe we may not be aware how we drive. So it's better we did specifically reporting. It will also avoid the chance of litigation because officer will also get the clarity why you have added and why you have reduced. If it's not coming in any of this, then you have fill 5O. Then if you will see table 6 of 9C provide for reason. It's better to exercise that reason option even though unreconciled turnover is coming 0. Even if unreconciled turnover is coming at 0, go fill the reason column for 5O adjustment what you have done, so that you are not suppressing anything from the department. Whatever you are doing based on today date law is correctly reported. So you can use table 6 for your reporting, even though there is a no unreconciled turnover. Sir, you want to add something, or?
We'll continue. All that I will say, people, is even though 9C is not applicable to you, fill this form. Keep this form. Only due care is that first line that you are seeing, turnover as per audited financials. Even the government recognize and understand there would be multiple GSTNs. So carve out and prepare a P&L, not the balance sheet, not the trial balance. Let me again say it carefully, not the P&L, not the so not the balance sheet, not the trial balance, but the P&L has to be GSTN wise. Profit and loss account columnar has to be GSTN wise. You don't have an expectation to be trial balanced GSTN wise or the balance sheet. You may ask, where do I split the share capital? Where do I split the loans? You may ask all this. No, I'm not asking that. But the turnover has to necessarily be each state P&L has to be given. So in the instructions they have said, the turnover as per audited financial statement means wherever you have the GSTN state wise, there has to be internally derived GSTN wise turnover. They are saying internally derived GSTN wise turnover, and that derived turnover shall be reported. That the derived turnover shall be reported. And this top line would include the total turnover, whether taxable, exempt, export, it could be any of this, right? And interestingly, you can have a positive or a negative number in this. You may say that how can there be a turnover be negative? Assuming this year I only have sales return, I have nothing. So that's fine. Even that is possible. So I wanted to get that it has to be state-wise carved out number from the audited financial. So you have a self-certificate kept ready for it. Please continue.
So now, if you will see, 9C start from books turnover, we came out to GST turnover. The moment we come to GST turnover, GSTR 9 work start. You have to understand GST turnover. The moment you drive GST turnover, then only you can feel your GSTR 9. Otherwise, it will be hard to drive because books will not match with what is called as GST turnover. Now, GSTR 9, if we see, we discussed about there are 6 parts. Now, part 2 of GSTR 9 deals with outward liability reporting. This part 2 has been further divided into 2 tables, table 4 and table 5. What is the purpose of this division? In table 4, they are trying to capture the outward supply on which we are saying we are liable to pay the taxes. Table 4, they are trying to capture the liability, means where we are saying the turnover which is on which GST is leviable. Part 5 also deal with the turnover, but this is that turnover where no GST liability arises, means where no GST is payable. Let us go through one by one table. This is table 4, which, as we discussed, where you have to disclose wherever you are paying GST on it. This table 4, all the table, sub-table which you are seeing is mandatory. Earlier, there were certain tables which they have given an optional and can be clubbed and written at one place. Now, all those mandatory, all those optional has been removed. All this table has been specifically to be reported wherever is applicable. Now, if you will see, like in GSTR 1, we report our outward supply by bifurcating into number of things. One is document type, that is invoice, debit note, credit note. Another is supply type, that it's related to B2C, B2B, export, or whatever another type, deem export. Accordingly, this table 4 of GSTR 9 is also divided. So first part, if you will see, table 4A to 4E, is what it is capturing the supply type. If it is B2C, you have to report in table 4A. If it is B2B, table 4B. Export with payment it is, because I said table 4 capture where tax is payable. So with payment is in table 4C, but without payment is your table 5. Similarly, SEZ with payment is over here, without payment is in table 5. Then deem export in table 4E. Now, this B2B, B2C, what we have to capture over here is only invoice data. B2C is a summary level reporting. Therefore, it will be reported net off, means net off of all the invoices, all the credit note, debit note, amendments, whatever you have done. B2C is a net reporting. But when it comes to table 4B to 4E, it is at invoice level reporting. Why? Because for this data, they have separately captured the debit note, credit note, amendment detail by way of 4I to 4L. And this data is now mandatory to be furnished. How you will get the data? Simply from R1. In R1, you would have disclosed your in document type, what is credit note, what is debit note, what amendment you have done would be already there in your GSTR 1. So this data you can capture from your R1 of what you have reported. Apart from outward supply, the invoicing which we have done, there is one more thing called advances. As we discussed while discussing 9C, driving our book turnover, there was one more adjustment which was for advance. Specifically in service sector only, when the advance is received, GST need to be paid. So accordingly, table 4F capture the details of advances. So 4F is a net off of advance received and advance adjusted. That need to be reported in table 4F. Now, apart from outward supply, we also pay tax on what is our inward supply liable under RCM. So in table 4, one exception apart from outward is your RCM liability, which is specifically covered in 4G. So anything which you have reported in table 3.1D, that is there in table 3.1D, we disclose about our RCM liability. The same data you have to report in table 4G. Now there is one more table 4G1, supply on which e-commerce is required to pay tax. This 4G1 is applicable to e-commerce operator. So where the e-commerce operator are paying tax, they need to disclose in this. Now the way we understood table 4, now let us take us to table 5. This is also an outward supply disclosure, but on this we are not paying tax. Like first 5A, zero rated without payment of tax. Like with payment, we just saw it is covered in 4C. Without payment is covered in 5A. Again, SEZ supply without payment to be 5B. 5C. Now there are certain supply which is my outward supply. Now you should not get confused 4G with 5C. 4G is an inward supply liable under RCM. This is 5C is an outward supply which is liable under RCM. You may be engaged into an outward supply where you are not paying tax because it is covered under RCM. That need to be disclosed over here. It is an outward supply. Then 5C1, like e-commerce operator we discuss over here, where e-commerce is liable, e-commerce will disclose. But there can be a case where you are supplying through e-commerce and e-commerce is paying tax. In that case, obviously, if you will not report it, then there will be mismatch between books turnover. So here you are not paying tax because liability has been passed, means liability has been put on e-commerce, but that is your turnover, which is forming part of your books turnover. So this part you have to disclose in 4C. Now coming to 5D, exempted. Like we discussed, that most common exempted turnover which comes is interest. So you have to check that if there is any interest income, you can report in 5D. Apart from that, there can be certain services which are exempted. If you are in providing any service to education sector or any other reason you are claiming any exemption, then you have to report in 5D. 5D and 5E nil rated are more or less common. So they have given an option. Either you can fill in 5D or you can fill in 5E. 5F non-GST apply. For this, you have to refer Schedule 3 of GST, which says activity or transaction which will not qualify as supply. So recently only they did changes for warehouse goods, where the goods has not came to custom port but has not been taken to domestic, have not been removed from port. In that case, when the sale happened, it is considered as non-GST supply until and unless it is clear to domestic. So those type of non-GST supply you have to specify in 5F. This here also table reporting from 5A to 5F is mandatory apart from column D and E. In D and E, they have said you can report in 5D exempted. Now coming down to down box 5H to K, this is also now given as an optional field, still continue as an optional field. So they are saying 5H credit note, debit note amendment in respect of 5A to F. You can cover in 5A to F net impact in terms of disclosing separately in 5H to K. So these are optional fields. But when I was discussing in table 4, I said these are mandatory fields. So you have to mandatory fill over here. However, in table 5, you can exercise this optional field and accordingly fill the data. Now,
Ashika.
yeah.
Okay, continue. I'll come.
Now, this is a validity check, basically. So, if you will see 5N, it is a total turnover, which is basically table 4 plus table 5, but excluding RCM and e-commerce operator, means basically 4G1. So 4G1. So this is basically a check. So 5N will include your taxable turnover also, but excluding RCM, and it will also include your exempted turnover. So while doing your outward, you should check that this is taken care. It will include all original data, amendment if any done, debit, credit note, and non-GST supply. So this is for outward supply summary. So you can take it.
Yeah. So in your part 2, 5N, in fact, someone asked the question, what is my turnover? What is this turnover I should be including? In fact, this slide is a classic example that you should be including all the turnover. You should be including all the turnover. And when we say all the turnover, it is taxable, exempt. Anything you think that it is not even part of GST, but it is there in your other income, whatever, like including interest received on IT refund. Some miscellaneous income, some credit came into the bank, you didn't know your part, you put it into other income. Yeah. Here, the only change, maybe Ashika, you write that 4N minus 4G and 4G1 in the PPT. So if you look at the for table 4 is the transactions on which tax is payable. Let me actually show it that so that you will understand why I am saying that. If you see table 4, transactions on which tax is applicable, and we say the transactions on which tax is applicable. However, the supplies, this is inward supplies. This is the e-commerce operator is required to pay. That means my tax liability is only this. So from my table 4N, I have to eliminate this portion to calculate the tax liability for the outward supply related, to calculate tax liability outward supply related. In the original instructions for the e-commerce operator, they have mentioned the supply made to e-commerce operator. This is something which came in January 22. They said the restaurant and others who are selling to e-commerce operator report it as exempt supply. But later they said, don't even report it as exempt supply. It is the e-commerce operator who is doing it. Don't even bring it for the purpose of reporting. That is what they have said. Accordingly, in my 5N calculating the turnover purpose, I will eliminate 4G and 4G1. So what is my total turnover, P&L turnover to be reconciled? Whole of table 5 plus table 4 excluding these two things. So is this clear to all? Any questions, any doubts, anything needs to be understood? Have we understood the outward related? Now we will see how do we pay the taxes, when do we pay the taxes, but have we understood this so far? 4 and 5, especially 5n, which is 5m plus 4n. In 4n, they are removing 4g1, 4g. Very good. Done. We can move.
Okay. In this,
In the meantime, if you have any questions, feel free to put your questions in the chat.
in this, one more thing to highlight is, as we are continuously saying that there can be a case 24-25 rectification may be done in 25-26. But while reporting table 4 or table 5, you have to take only the impact of what you have done in 1 and 3B of 24-25. Even though you have rectified subsequently, that will form part of part 5 of GSTR 9. Here you will report about only the things you have reported in 24-25. Even the amendment which has taken in 24-25 will be only reported. The amendment which has happened in 25-26 will be taken care by part 5 of GSTR 9, and it will not be forming part of table 4 and table 5. So you have to keep in mind while filing GSTR 9, table 4 and for table 5, just take GSTR 1 and 3B of 24-25 only. Even though there is changes in you have done in 25-26, that will come separately. But for table 4 and 5, it is 24-25. So this is basically a payment-based reporting to make you explain what form part of table 4 and table 5 of GSTR 9 for outward, and what will form part of part 5 of GSTR 9. So if any payment which has been done in 24-25 will come in table 4, where anything of 24-25 you have taken impact in 25-26 will be reported in table 10 and 11. If it is an increment, then table 10. If it is a decrease, then table 11. Means basically, if you have reported credit note of 24-25 in 25-26, it will be table 11. If one invoice was missed, which you have reported, then it will be table 10. However, it may be a case, even after considering this, when you went into books and did the RECO, you find out there is certain short payment, which you are planning to discharge to DRC03. If you are paying to DRC03, then it will again form part of table 4 and not table 10 and 11. Even though you are paying now, but as liability is discharged by selecting DRC03 of 24-25, it will be reported in table 4. So it's just a correlation to explain you how the tax payment will decide your reporting in GSTR 9. That's the reason when we started our session, if you will notice, I am using tables numbers. And that's the reason at the starting of the session, we first given you a brief about the various table cover in 99C. Anyhow, we will be taking you also through our Excel worksheet to give you more proper clarity on the reporting part. This is about if any error you have done and you could not rectify it by this October month GST return, then obviously only option you left is to pay the taxes. And how you will pay the taxes? Through DRC03. So if any, if any discrepancy you notice, you pay through DRC03. Now the next question which arises, can we pay through cash, or we have to pay, or we can pay through ITC also? Like in the past, it was said that when any liability decided through 99C, then it need to be paid mandatory through cash only. You can't utilize ITC. After that, they have given the relaxation that no, you can use ITC also. So if there is a short payment of tax, you can discharge through cash ITC. Even similarly, like excess ITC or ineligible ITC claim, then also you can discharge to cash or ITC part. But when Apart from that, if there any RCM liability is there, then you have to pay in cash only. Now, let us understand about the spillover transactions. So here I will like you to pay little attention so that you can understand how the tables to be filled of GSTR 99C. We have taken multiple scenario to explain the same. Now over here, the first part, if you will see, we are talking about last year, 23-24. So we are saying in 23-24, we have shown table 10, 5K and table 11, 2K. So net impact, we are talking that 3,000 tax of 23-24 have been paid in 24-25. Okay, 23-24, 3,000 tax has been paid in 24-25. Now we will be moving forward by one example. First one. Here, if you will see, first one, we are talking that we have correctly disclosed. So we are saying our actual output liability is 1 lakh. But how much we have paid in 3B? 1,03,000. Okay, because 3,000 belongs to last year. Our actual output liability is 1 lakh. So what we will report in table 4? 1 lakh only, because our liability for current period 24-25 is 1 lakh, though tax paid is 1,03,000. But we will report not what is paid, but what is liable to pay for based on turnover of 24-25. So you will say table 4, 1 lakh. My tax payable as per GSTR 9, what it will come? 1 lakh. But my paid, which I have paid through 3B, will come what? 1,03,000. Though it will appear that I have paid 3,000 excess, but when I adjust with my last year, then there is no excess payment. And this difference of 3,000 will easily help the officer to check your table 10 and 11 of the last year, because I am reporting I paid in next year. So this minus with this difference of tax payable versus tax paid in GSTR 9 will clearly show I have paid my last year liability. So this difference will be there and no reporting will be there. But if your 9C is applicable to you, in table 9, where we are rate wise reporting our liability, over there also it will be 1 lakh and 1 lakh. But in the reason box, you can specify that you have paid through 3B 1 lakh 3, out of which 3,000 belongs to last year liability as a disclosure purpose, though there will be no RICO difference. Another example, 24-25 short shown in 3B and paid in next year. Means I have paid my liability lower than what is payable for 24-25, but I corrected in 25-26. How to deal? So here my actual output liability is 1,08,000. Okay, but on how much I have paid tax is 1,03,000. Again, we are taking last year impact. You have to keep in mind in all this example, we are assuming 3,000 belongs to last year payment in the current year, because we are dealing with spillover. That's why we have kept. So out of 1,03,000, 3 belongs to last year. So what belongs to current year? You paid 1 lakh. If you remember, when the sir was discussing about the concept, he was every time saying what you have paid for the current year, that is what you have to disclose. So table 4 is 1 lakh what you have paid for 24-25. Your payable became again 1 lakh for 24-25, but you have paid 1,03,000. But actual payment is 1 lakh only, because 3,000 belongs to last year. If we see on this basis, then you will finding you have paid 8K short. Here it is 1,08,000, you paid 1 lakh for current year. So 8K is short. And as we mentioned, we are taking the example where we are saying this error we have corrected in the next year. So in table 10 of GSTR 9, we will be showing that 8K we have paid in the next year. Though this difference of payable versus paid will not match. Because if you will see payable versus paid, you will say 3,000 difference. But what has been paid is 8,000 in the next year. There will be discrepancy between payable versus paid. But in totality, when we do our GSTR 9C RICO, this all mismatch will not happen. Reason being, it will take impact of table 10, 11 in our 99C. Now another example. 24, 25 short shown in 3B and not corrected. In this example, we said we corrected in the next year. That's why we reported in table 10. Here we are saying we have not corrected. If we have not corrected, then we have to pay through DRC03 only. So same reporting going, only the change is instead of table 10, here DRC03 of 8K came. Now 24, 25, excess shown in 3B corrected. Now, like there can be scenario of not short payment, but excess payment is also possible. So over here, as per your books, you were liable to pay 92K, but you have paid again 1 lakh. I'm saying though paid, you are seeing 1 lakh 3, but your paid for current year 24-25 is only 1 lakh because 3,000 belongs to last year. So again, over here, what you paid is 1 lakh. But here, while reporting in table 4, you will report 1 lakh only. Okay. Because you have paid excess, that impact will be taken care by table 11. So 1 lakh minus 8 will show you 92K. So you will report in table 4 what you have paid for current period, that is 1 lakh. And as you have paid excess, you will be reporting in table 11 to show that whatever you have paid excess in 24-25, you have adjusted with next year 25-26 liability. Either you can do this, or if you have not adjusted with next year liability, you can go for refund if there is actual excess payment of tax. Based on 99C also, you can file the refund. Now, another example. 24-25 excess shown, not corrected. Now over here, our actual liability is showing 92K. We have reported in table 4 also 92K. Tax payable 92K. Tax paid is your 1 lakh 3. Again, 1 lakh 1,000 is your actual liability for 24-25 you have paid. So here we have made excess payment and we have not corrected. So as I said, you can go for refund also if you have not corrected. Now, whatever we discuss, where we took 23-24 impact in 24-25 and 24-25 impact in 25-26, this is a combination of all the above. So here our actual books is 1 lakh 10. Okay. Tax paid is 1 lakh 3, out of which only 1 lakh belongs to current year. Now, out of this, we are saying we have done 4,000 adjustment in 25-26, which is table 11. Suppose credit note reported 3K in the next year, table 7, table 10, where we have reported 7,000 invoice there. So 4,000 we have adjusted or rectified in the next year. So if we have done taking the impact, sorry, 1 minute.
In the meantime, you can put your questions in the chat. I can see one question from Ashok sir. And let Ashika complete, then I'll add.
Okay. So here we are saying to the extent of 4,000, we have rectified in 25-26, for which we have taken impact in 10 and 11. So 1 lakh 10 minus 4K, what became payable? 1 lakh 6. Out of 1 lakh 6, 1 lakh we have paid in the current period. So balance 6,000 we have to pay through DRC03. So this is how the spillover transaction will work. So you want to add, sir, you can add.
Yes. It's appearing like a maze. It's like you are lost. Let me kind of do a simple summary of what you are seeing. Again, as usual, with first, we should understand what is the reporting that we are doing in R9. What we are doing, the reporting in R9 is what we need to understand. Not sure to what extent you paid attention to. Maybe let me just take you to the screen. Is like, is this screen clear to you all? It's like if you have paid taxes in GSTR 3B till March 25, you will show in table 4. If you have paid taxes in GSTR 3B from April 25 up until October 25, which is filed in November, on or before 30th November, anything. In fact, right word is not October 25. In any 3B filed on or before 30th November, because some may file only April return, rest all October, June, July filed after 30th November. The right word is paid by in 30th November. You will show in table 10. If you have paid anything using DRC03, you will show in table 4. Is this slide clear to all? Ravi, branch P&L need not be certified. If this slide is clear, please put it as yes. All right. So now let's understand the example which Ashika was explaining. So if we have to know the taxes paid for 24-25, I'm carefully using the word taxes paid for 24-25 could be in any of the following categories. It could be any of the following categories. 3B of 23-24, 3B of 24-24, 23-24, 1 year before. In table 10, so I have to minus this value. I have to add table 11. That means last year only I have paid extra for 24-25. Or last year only I am saying that 23-24 I have paid in 24-25 3B. So to the 3B value, so we are saying the taxes paid basis to 3B. Now we are taking the basis sigma. So sum total GSTR 3B of 24-25. We are taking GSTR 3B of 24-25. So to that, for that value, you are saying that in last year in R9, if I am showing something in table 10, that means it is paid in 24-25, but it is not paid for 24-25. Okay, be careful with the words. Paid in 24-25, but it is pertaining to 23-24, right? So obviously you have adjusted this. You are having actual 3B values here. Then you have a 3B values here, right? You have a 3B values here, right? Now, whatever the 3B values which are here in the subsequent year, whatever the 3B values which you have in the subsequent year, if you have something in subsequent year, you are borrowing to this year. If you have something in the subsequent year, you are borrowing to this year. That means you will be writing, if you have paid for the current year, you paid in next year, then you will be adding it to table 10. You will be reducing from table 11, you paid extra and it is sitting there. Okay. Then on top of it, if you are saying that something you have paid using DRC03. You have paid using DRC03. So this you will be writing in table 4. Now you have all the combinations. In the slide which Ashika has given, taxes could have been paid in different periods. You have to sit with a calm mind that, okay, how much I have to pay for 24-25? That is, let's say 100. how much I have paid in 24-25. Paid for is different from paid in. If you have paid something and paid in 24-25, but last year you have made some adjustment, make these adjustments of this. You reduce the last year thing. And you are saying that I am borrowing some taxes of the next year, you make those adjustments of it. And you now compare whatever you have paid in DRC03. You merge all of this, then you will get how much has been paid in 24-25 for 24-25. That's a reconciliation which Ashika was mentioning. To the extent possible, if table 10 and 11 is not genuine, when I say not genuine, you don't need to really say that I have paid in April. If it is not genuine, do not report table 10 and 11, pay through DRC03. Can I not really show table 10? Answer is no, you can always show, but it is confusing. Out of the experience, Ashika has mentioned that department officer do not understand. Do you think that they will spend time attending sessions like this? Answer is no. They would always like Yuddha Kale Swastra Vidya. So when in the need, I will try, just before entering the battlefield, I will find how to hold the sword. I will how to swing it. Then I'll jump into the battlefield as if I am the warrior, right? Unfortunately, they have upper hand. They can ask any questions and they have pen with them. They can write anything. I don't agree. I don't agree. It's always the taxpayer is at the mercy to go appeal 1, appeal 2, appeal 3. And very rarely they get stitches saying that, okay, you are doing a poor audit. Yeah. So be careful what you are reporting. Yeah. This is what I want to explain, clarifying. Now that screen looked very confusing, but maybe it's like if you start writing with your numbers, you will understand. Yes, Ashika. Ashika, you're on mute.
Now we understood about the outward, how it to be reported in 99C and what are the mandatory field there. Now let us move to ITC. Now in input tax credit, there are changes have been done in the reporting due to those reporting pattern. Obviously, there will be an impact on how to do reconciliation. There may be a cases where you are doing reconciliation and differences are coming. So we are going to discuss how you can report so that that difference will not come or it will be very minor. So if you will see GSTR 9 and 9C, these are the various tables which deals with the input tax credit reporting. Table 6, 7, 8 of GSTR 9 and table 12 and 14 of GSTR 9C. Now, as you will see, table 6 deals with whatever ITC you have reported in 3B as availment during the period. Now, over here, it's only about 24-25 reporting done for ITC in GSTR 3B. Here we are not talking about like outward 23-24 in 24-25, 24-25 in 25-26. This has nothing to do when it comes to ITC in this tables. This is purely for reporting based on what you have reported in 3B. So table 6 deals with what you have availed. Table 7 deals with what you have reversed. And table 8 is basically a reconciliation between 2B versus 3B. We will be going with each table, which table what you have to fill. So as of now, I'm just giving you a snapshot of what are the tables are there. Now, when we come to 9C, it is a books versus 3B. What ITC you have recorded in books and what is there in your 3B. This is what table 12 deals with. Table 14 is a expense wise. They want us to give on what expenses, what ITC I have availed. Basically, it fully captured the expenses you have accounted in PL. And after that, you write against which are the expenses you have availed the ITC of. Now, before we move forward, let us understand about the credit flow which happened in electronic credit ledger. Why? Because based on this only, table reporting of GSTR 9 has been designed for ITC. So we are very common and familiar with how the ITC gets reported from 3B and flow to electronic credit ledger. But 3B is not the only way where the credit flow to electronic credit ledger. There are other also where the credit directly go. One is Tran 1, Tran 2, ITC 01 and ITC 02. Though Tran 1 and Tran 2 is now no more applicable because now all the extension, whatever was given by Supreme Court, all got over. But there may be a case if some dispute is going, it may come. But ITC 01 and ITC 02 will be there. If there is a takeover merger, then these forms will come into picture. Now, whatever ITC go through 3B, that is what is captured from table 6A1 to 6H in GSTR 9. So 3B, table 6A1 to 6H is what captured in GSTR 9. And whatever go directly entry into electronic credit ledger, it is captured to table 6K to 6M. So in this way, you can bifurcate your reporting pattern. So first, we will deal with the reporting pattern which flows from 3B. Now, if you will see in GSTR 3B, they have already specified from your January 22 that 2B is the base. And they have also make it mandatory how it to be reported in 3B based on 2B. So now everything is very with clarity. They have specified which column what you have to fill. Now, if you will see GSTR 3B table 4A5, which is the auto-populated data based on 2B, where we fill our all other ITC detail. Basically, the ITC, which is covered under forward charge, where supplier has charged you GST and you paid to them. So this is what is covered in 4A5. This reporting in GSTR 9 is dealt by these three tables, 6A1, 6B, 6H. We will come respectively what is 6A1, 6B, 6H. First, we are just trying to understand the correlation between 3B and 9. So for 6A1 and 6B, 6H, you will use the mapping from 4A5. Now RCM. RCM we report in 3B in one table only, 4A3. But when it comes to 9, they have divided into two tables, 6C and 6D. 6C deals with unregistered, 6D deals with registered. Very simple. The data of RCM, which auto-populated in 2B, is a registered RCM that you will report in 6D. And apart from that, whatever balance ITC, if you have paid, it will go in 6C. So from 4A3, you will get your RCM ITC detail for GSTR 9. Import of goods, we report in 4A1 of 3B, which has a correlation in 6E. Import of service, if any, you have if anything you have paid and claim ITC, you would have reported in 4A2. For that data, it will flow in 6F. If ISD registration is there, ISD credit comes in 4A4, their correlation is 6G. So if you will see whichever tables of 3B, there is a direct correlation to fill specifically in which you have to fill in GSTR 9. Now, if suppose there has been error while filing 3B, means you wrongly fill RCM ITC under ISD, it can be a case. If in classification in 3B you have done wrong, it's not that you will continue the same in GSTR 9. Because if you will notice when sir started in the intro session, it says that it's a last opportunity to rectify. So if you have done error while reporting in 3B in classification, you can correctly report while doing in GSTR 9. Because in total ITC will match, only difference will be in the breakup, which will also show your genuineness. Because if anything happened, you can easily show that I have rectified in while filing GSTR 9. Now we'll move forward with the reporting changes. Now the first reporting changes is they have inserted a new table, table 6A1. Now what is this table 6A1 which they have inserted? Now they are saying in this table, I have to report about the ITC relating to 23-24 I have availed in 24-25. This data they want us to report separately here in 6A1. Now, why they are asking this data is you have to understand the difference between how table 8 is getting auto-populated for the purpose of GSTR 9. Then only you will get the idea of what you have to report in 6A1. So first, let us just understand what reporting they are asking, and when through different scenario, we will understand where to report. So 6A1, they want us to report 23-24 reported in 24-25, means ITC claim. Based on 6A1, when you will do net off, you will only get ITC which belongs to 24-25. Now, as they have inserted 6A1, now in 6B, they want us to report only the ITC which is pertaining to 24-25 invoice avail in 24-25 through 3B. Now, if you notice, we have been given one more thing is ECRS, Electronic Credit Reclaim and Restatement. As per the reporting changes in 3B, I can't say recent, it's been more than 2 years we have to follow. So over there, they said whichever ITC coming in 2B should be properly reported in 4A5. And out of that, if you are not eligible for any ITC, you have to report in 4B1, do permanent reversal. But there can be a ITC for which you are eligible, but any of the condition of section 16 is not satisfied. Then they are saying you park it in 4B2 and you claim it when you satisfy the condition. Just for example, if you have received the invoice, but goods has not reached your premises. So you were claiming the ITC in 4A5 based on 2B auto-populated, but you were not utilizing that ITC. So what you were doing, you were parking that ITC in 4B2 because goods has not received. So one of the condition not satisfied. So you parked in 4B2 and net ITC you were availing. But when the goods is received, you are again adding back in 4A5 and you are showing 4D1 as a acknowledgement. This is a past year ITC which I am claiming now. Past year transaction ITC which you are claiming now, which has not auto-populated in this current month 2B. So our 4A consists of two ITC. One is first time availment, one is reclaim ITC. Now they are saying the first time availment you have to report in 6B, and the ITC which you are reclaiming on satisfying of the condition by way of 4D1 reporting need to be reported separately in table 6H. Now let us understand this through one example. Now suppose, I hope screen is visible.
PPT is visible.
Now Excel sheet is visible.
Yes, now it's visible.
Okay, fine. Now suppose you have availed a total ITC of 15 lakh. The breakup of which I have given down, out of which suppose 23-24 ITC which you have reported is you have claimed in 24-25. So this is the last year ITC you claim in 24-25. Then one is itself belonging to 24-25, 11 lakh. Another is reclaim ITC. Now reclaim can also be of last year ITC reclaim in current year. It can be also current year ITC reclaim, means in between the year only it got settled. Now last year ITC of 23-24 which you have claimed in 24-25, you have to report separately in table 6A1. ITC which belongs to fresh availment like 11 lakh, it is 6B. And which is a reclaimable of 24-25, you have to report in 6H. But reclaimable of 23-24 will be reported in 6A1. So whatever may be the last year ITC, it need to be reported in 3.1. Maybe fresh ITC or reclaim ITC. Both they want us to report in 6A1. But when it's related to current year, they are asking us to divide into fresh and reclaim. Fresh, they are asking to report in 6B. Fresh means first time when you are availing. When you are doing reclaim, they are asking us to report 6H. The reason is to do the deco with table 8. Because if I consider this 11 plus 250. My table 8A auto-populated will only show 11 lakh. It will not show 1315 because my 4A5 will be showing 1315 due to this reclaimable ITC, but due to which table 8A will have a reconciliation issue up to this extent. So that's why they have divided the reporting into 6B and 6H for reclaimable purpose. One. Second problem, why they divided ITC of last year, fresh availment means first time availment, and last year is a difference between how the data they are planning to auto populate for 2B and 8A. For that I will come. Let me first take you through only this one. So this is basically a chart to give you how you have to report. If last year ITC you have claim in current year, then 23-24 fresh availment 6A1. Opening ECRS means if you will go into GST portal, whatever last year ITC you have parked in 4B2 and you haven't not claimed by way of 4D1, still not reclaimed, then it will be appearing in your opening electronic credit and reclaim statement. You can go and check in GST portal, it is available. So opening ECRS, now they have divided the reporting again into two parts for reclaimable. One, they are saying 37 and 37A. What is this? These are the rules which says you have to make your payment to supplier within 180 days. And another rule deals with supplier non-filing of GSTR 3B. So if you have parked in ECRS because you have not made payment to your supplier or your supplier has not filed 3B, now they have done the compliance. Now you have made the payment or now your supplier has filed the 3B. Then they are asking you to report in 6H. Okay, now they are dividing this opening ECRS reporting. They want you to report for 37 and 37A impact in 6H. But other than 37 and 37 impact, they want you to report in 6A1, which is what I dealt in this example and show it to you. So your 6A1 total will become your 1 lakh fresh ITC and 50,000, which is the opening ECRS you have reclaimed. Now coming to 24-25 ITC, means ITC which is auto-populated in 24-25 pertaining to 24-25. Now what you have availed in 24-25 first time fresh availment will go in table 6B of GSTR 9. What you have availed means you are saying you have availed in next year. Transaction belongs to 24-25, but it auto-populated in 25-26 2B. Because we know 2B is the base. Until and unless it's come in 2B, you can't claim. But for the books purpose, when we are doing our audited financial, that transaction will be there and you would have parked that ITC as a closing balance. So what ITC of 24-25 get auto-populated in 25-26, you have to report in table 8C and table 30, which basically deals with the reporting of carry forward. Now, avail does not only include fresh availment, but it also includes reclaimable due to reporting changes in 3B. That reclaimable ITC, you have to report in 6H. So basically what you have reported in 4D1, which belongs to 24-25, 6H. You have to remember reclaimable, you have to divide into two. One is opening ECRS, which belongs to 23-24. That they want in 6A1. One is reclaimable during the period. That they want you to report in 6H. Now, 24-25, obviously there will be reversals also. So if 24-25 reversal, you have to report in table 7. If you have done the reversal pertaining to 24-25 in the next year, then you have to report in tables 12. It's like a spillover, what we discussed for outward, that when there is an outward spillover, there is table 10 and 11. But when there is a ITC spillover, there is table 12 and 13, which deals with claim and reversal. So over here, it is reversal to table 12. If it is availment, table 30. So that is how the reporting pattern is there. So let us understand this one by one example. So my focus is more on reclaimable. because this part I have explained. Now let us see how the reclaimable will work. So first see reclaimable other than Rule 37 and 37A. Even everywhere they have divided reclaimable into two parts. One, they are saying reclaimable due to Rule 37 and 37A, and one is other than 37 and 37A. So government is making very much pretty clear. If you have not done payment within 180 days or your supplier has not filed 3B, you have to take action. So let us first take other than. Now, based on the example you understood, when we do original claim, first time claim, they are asking me to do reporting in 6B. Now, this original claim, if I have not claimed due to non-compliance of section 16, I would have reversed and I need to show in table 7H. These are all GSTR 9 table. So, original claim, I will report in 6B. Temporary parking, which I have done in 4B2, I will do in 7H. And when I reclaim, then I have to report in table 6H of GSTR 9. So this is basically 4D1. This is your 4B2 of 3B. And this is your 4A1 or 4A5 of 3B. These are GSTR 9. And this is from 3B data from which GSTR 9 data will flow. However, when it comes to Rule 37, 37A, there is a slight difference. Original is still under 6B. Reversal get changed. Reversal, they are asking you to report in 7A. They have inserted separate table 7A and 7A1 and 7A2 for Rule 37 and 37A because they want to track the reversal on this account. So here it is other reversal. When it is on account of 37 and 37A, they are asking you to report in 7A respectively. But reclaim still under 6H. This is for 24-25 ITC. Now coming to 23-24 ITC. It may be a situation that 23-24 if anybody have any doubt, they can ask because it's too much of tables and reporting changes is little high. Now again over here, they again split into two. One Rule 37, 37A and other than Rule 37 and 37A. Now this is, I'm talking about last year ITC, which you have claimed fresh. First time you have availed in 23-24, but you parked in 4B2 of 23-24. Now in 24-25, you are reclaiming ITC as you have fulfilled the condition. So if we see for 24-25, while filing GSTR 9, original claim and reversal has no role to play. Reason being, it belongs to last year. But you have reclaimed, so you have to report in 6A1. If it is other than Rule 37 and 37A. So reclaim, you have to report in 6A1. But if it is due to on account of Rule 37 and 37A, then they are asking you have to report the reclaim in table 6H. So here they are changing the reporting based on reason of reversal. So if reason is other than, then 6A1. And if reason is Rule 37 and 37A, then 6H. But over here, you will see similarly over here also reversal, they have changed 7A and 7H, but reclaim is 6H and 6H only. So this reporting you have to keep in mind while doing your ITC tables. Here I have already explained how the data will flow in 6A1 and 6B and 6H. Now the question which arises, why they did all this thing? They did it because of 2A versus 8A, how they are going to auto-populate. So let us first understand how they are going to auto-populate table 8A. Now, when we see our 24-25 2B, obviously who have filed belatedly or who have reported invoice belatedly in 24-25 will get auto-populated in 2B of 24-25. So anybody who did belated filing or who reported the invoice belatedly. 2B will be obviously based on filing period, will auto-populate. So it will also consist of 23-24 if anybody has done delay reporting. But table 8A auto-population, which they are talking about, they are saying I will not include 23-24 ITC even though it is auto-populated in 2B of 24-25. So they are excluding this. So this is not getting auto-populated, due to which this impact they are reducing by way of 6A1. So what will auto-populate? Only transaction which pertain to 24-25. So transaction which pertain to 24-25 auto-populated in 2B of 25 plus auto-populated in 25-26. So transaction which pertain to 24-25, which auto-populated in either of the year 24-25 or 25-26, will be the total of table 8A. That is what will be captured in table 8A. So that's a difference between 2B versus 8A, due to which there will be a reporting difference. And that difference, how they're taken care by way of 6A1. So they are, by way of 6A1, they are asking me to exclude last year, even though auto-populated in 2B of current period. Even they are also excluding the impact of last year reclaimable. So therefore, what you are getting in 6B is only ITC of 24-25 claim in 24-25. Because 8A is a auto-populated data. 8B again is a auto-populated data, which will be auto-populated based on 6B. Now 6B is net off of total ITC as per 3B minus last year ITC. So 6B will itself exclude last year ITC claim, and it will only consist of ITC of the transaction pertaining to 24-25. That will be only there, thereby facilitating the reconciliation with table 8A. So this is one example to explain it. So suppose this is my ITC as per 2B. So here I'm basically doing the comparison to show how the 2B ITC will be calculated and how 8A will be calculated. So over here, this is my 23-24 ITC, which has auto-populated in 24-25. And this is 24-25 ITC, which is auto-populated in 24-25. So 2B will be first two serial number auto-population, because 2B based on filing period. So 24-25 it came, including 23-24 and 24-25. So this is how 2B will become 2,20,000. But when it comes to 8A, it will be based on this one, 24-25 transaction. Whichever year it comes, it will take the total. So it will take 160. 24-25, which is coming in 24-25, and 24-25 coming in 25-26. So there is a difference between how the data will auto-populate it. That's the reason there will be a difference. And to cater this difference, what they did, they removed this 23-24 impact from table 6B, which will be a comparison table for table 8A. So when you will be finding 6B, it will be only showing you 1,20,000. So 8B will auto-populate based on what you have filed in 6B, which will be 120. So how the reporting will happen? 23-24 ITC will go in 6A1 of GSTR 9. And obviously this ITC you would have parked in last year as a carry forward. So in 9C, table 12, which deals with the books ITC, over there you will show in table 12B as a brought forward ITC. The ITC which pertains to current year 120 will be reported in R9 6B, and in 12 and in 9C it will form part of table 12A. ITC, which is of 24-25, auto-populated in 25-26. In R9, it will go in 8C and table 13. And 9C respective table is table 12C. So this is how the reporting will happen and how the RICO will work. Now, as table 8A got 1,60,000, my 8B is 1,20,000 based on this serial number 2. 6B auto-population happened over here. And 8A happened based on 24-25, this 1-2 addition. So 40K is the ITC I'm parking and claiming the next year. So it will form reported in table 8C. This is how you have to do the recall of ITC. Then only your table 6 and table 8 will match. Otherwise, there will be unreconciled ITC. I hope this is clear. If anybody have any doubt, they can ask for ITC before I move forward.
Any questions to anyone? Okay, I just want to summarize for everyone in a very snapshot in a simple way. Basically, what they have done in the current year, they have done a split. They have done a split, and this is the common challenge which we have been facing earlier. This is a common challenge which we are facing earlier. On ITC of the previous year, how do I report? This was a common challenge which we were facing. I'll give you a very simple example, easy to understand, then you can add complications. My ITC as per 2B, my ITC as per 2B is 100. My ITC as per 2B is 100. I have availed in 3B only 80. What did I do? Balance 20 I have availed in next year. 20 I have availed in next year. In a normal course, we were always saying, okay, by the way, the definition of ITC is ITC that you have availed is only the ITC. The ITC which is in the books and you have not availed is not an ITC. The ITC that is there in the books and you have not availed is not ITC. There's a word difference between section 16, subsection 2 versus section 41. Okay, now if we have to go legally, the wordings which have been there in your section 16 when it comes to ITC, they are talking about the input tax credit which is taken is that you have it is there in your books of accounts, but in terms of availment comes in 3B. He has furnished under section 39. Okay, so the 16(2)D is very clear. You have to report it in 3B only, then it becomes your input tax credit. Let's use a happy path that my books and 2B is matching. My books and 2B is matching. It is just that I made an error in 3B. I made an error in 3B. I will start from financial year 23-24 and 24-25. Financial year 23-24, 24-25. Let us take, I have taken this in financial year 23-24 and I have taken this 20 in financial year 24-25. Don't ask me why. People always make mistakes. We never know why. You made a mistake. But in everything in 2B you have taken. Let's continue the same example. In financial year 24-25, let's say your 2B value is 150 rupees. Your 2B value is 150 rupees and you are taking everything in your 3B. So I am giving this as the financial year 2B of 23-24, 2B of 23-24, and how you have taken in 3B, how you have taken in your 3B. Now this I am saying 2B of 24-25, 2B of 24-25. Now I want to hear from everyone what is the value I'll be taking in my GSTR 3B? What is the value I'll be taking in GSTR 3B in financial year 24-25? Can you all give your answer in the chat? Okay, I'm getting only one answer. Is this such a complicated question that I have asked? I don't think so. I said last year in my 2B 100 rupees was there. So I have taken only 80. What did I do? Balance. I am saying that I have taken in the next year. Next year 2B was showing 150. So how much I would have taken in 3B of next year? That's the question. Perfect. So everyone understands, everyone is explaining that the next year I have taken 170 rupees. I am agreeing to this. I have no doubts, no questions. I am agreeing to this. Now, the challenge which was, how will I report ITC in GSTR 9 in 23-24 GSTR 9 table 6A, that is actually as per 3B what I've taken, 6A will show 80, 6B will also show 80, 8A, what is that I should have taken? 100, 8B, what I have taken? 80. What happened to the balance? I have deferred next year. This is how it used to come in a normal course. Yeah. Is 23-24 GSTR 9 reporting everyone clear? Or anyone has disagreement? Anyone wants to say anything about it? 6A is auto-populated. 8A is also auto-populated, but 6A is auto-populated from 4C, sorry, 4A of 3B, auto-populated from 2B. This is also auto from 6B of R9. Saket, I'll come to table 1213. Table 1213 is only an information. It won't change because department is creating liability basis table 8. But ideally, whatever this value of 20 will be reported in table 13 also. I can put it, table 13 is equal to 20. Okay. We are clear with this, everyone? Are we clear with this? Anyone, any doubts? Now, if this continued, if they have not amended the thing, if they have not amended, okay? If they have not amended, sorry. Just seeing, I can easily copy paste. Yeah. If they have not earlier version of R9, my 24-25, my 24-25 would be like this. My earlier version of R9, 24-25 would be like this. My table 6 earlier version of R9, my table 6. In my 24-25, it is auto-populating from 3B. I have claimed 170. It is showing, it is going to show 170. It is going to show 170. And 6B, I'm going to explain 170. 8A is auto-populated from 2B. 2B is showing 150. 8B is coming from 6B. 6B is 170. Okay. 8C was a future credit. We don't know what we were supposed to do with the earlier credits. Don't know what we were supposed to do with the earlier credits. And it used to show 8D as negative. 8D as a negative 20. 8D as a negative 20. This is how it was coming. This is how it was coming. Yeah. Is this 24-25 ITC reporting, is this clear to everyone? The issue with this, the issue that came up with this is in this version, we had this carry forward ITC which was showing negative. We don't know what to do, how to adjust. There was no clarity on what to do, how to adjust. Now the government said, I understand. Because of 8D being negative, you are getting notices. Because 8D being negative, you are getting notices. What will I do? So they said, don't worry. This is what we will do. So they have now given revised the thing. They have now given revised this one. One minute, please. I'm a little lazy to do a copy paste, so I'm just trying to. Yeah. So new R9. What are they saying in the new R9? They are saying, okay, your table 6A is auto-populating 170 rupees from 4A. What you can do, they have now segregated 6A into two categories. What is that? 6A1. They have segregated the table 6B, sorry, 6B and 6A into two categories. So they said 6A1, and they are saying that 6A1 will capture the ITC of the preceding, which is claimed by the recipient, which is also included in the 6A of GSTR 9. So 6A1, I will be reporting 20. In my 6A1, I will be reporting 20. The moment I report the 20, there will be an auto-calculated 6A2. 6A2 will now become 150. 6A2 will become 150. 8A, you can see it is showing 150. Now 8B. Now 6A2 is what I have to explain. 6A2 is what I have to explain in my 6B and onwards. So now I can easily explain what is credit pertaining to current period. I will be explaining on 150. My 8B is also 150 and 8C is 0. Your 8D is also nil. 8D is also nil. So the new version of GSTR 9 that has come, is now giving a proper picture wherein you are not getting any liability So you're not going to get any notice for this. You're not going to get any notice for this. And you can just take the screenshot of the screen for your better understanding. But basically, they have had understood that, okay, something of the past which is coming and it is distorting table 8. So when there are earlier, in my last year session, if you have attended, I would have said show 8C negative. There are many experts who said instead of showing 8C negative, why don't you show 6B, a lower value, and show it in 6H? The problem came in 8B was considered from 6B and 6H. So this year they have amended that correction also to ensure that even the reclaim figure shouldn't be added. So basically they have found out that, okay, the value, if I'm reporting in any of the table, I will be violating the instructions given in the form. There is no one in India could perfectly prepare R9. Trust me, if there were any carry forward credits, either you will be reporting in 6H violating the form instruction, or you will be reporting 8C negative, or someone were reporting in 6CM. Everyone were doing anything. And reason, there was no guidance given by the either the portal or the CBIC. And this is another thing which we always say, that the education is more important. I think the lawmakers, when they are making the form, should give their intention and give that with a proper example. First time CBIC, I will not say CBIC, GSTN came up with an advisory, hoping the GSTN advisory, the intention of the form is what the instructions and the explanation is what the lawmakers thought. And this is how the new understanding of the form is. Yeah. All right. So any question? So Saket, you will not get any table 13. Table 13 is only something you availed in next year. So the availment in next year is nil, so nothing will come. Is this understanding clear of introduction of 6A1 and the reporting, everyone? Hello? All right, I got 1, 2 clears. Perfect. Yes, Ashika, over to you back. Ashika, you are there? Ashika, you have to unmute yourself.
So after that 6A1 insertion, these are the other tables which they have inserted for ITC purpose. Now they specifically want us to report about Route 37 and 37A reversal if we are doing, that need to be separately reported. And all the table 7, whatever reversal they have specified, 37, 37A, Route 42, 43A, whichever they have specified, all this field are now mandatory. So you have to do specifically reporting with respect to the reversal you are making. Earlier there was optional, everybody can report under others. Now they want us to report reversal as per the rule or law you are doing those reversal. Only the temporary park ITC, which you are doing in 4B2 to be reclaimed afterward, they want us to report in other reversal. Coming to table 6. Now, if you will find table 6, we have already discussed how the reporting from 3B flow in table 6. But apart from that, they also want us to divide into 3 more category: input, capital goods, and input service. Here, To write about capital goods, it's a mandatory field. You have to fill in GSTR 9. Capital goods identification is very simple. Earlier in pre-GST, they were specifically decided, explained, definition was that this happened, then only capital goods. Under GST, it's a very simple definition. Whatever you are adding in fixed asset register is a capital goods. So, and only the fixed asset register which you have added, on which you have availed the ITC, will only be qualifying. Where you have expense of to PL, it doesn't, capitalize with the capital goods, then the capital goods ITC will not arise. So wherever you have availed the ITC and it is a part of your fixed asset register, that qualify as capital goods, and you have to separately report for it. For input and input service, they have given a liberty, then you can report total in inputs instead of bifurcating into input or input service. Now coming to the part of table 8, as sir already has discussed 8A, 8B, how 8B is auto-populating based on 6B after excluding 6A1 impact. Here you have to report about ITC carry forward. So this we have in this scenario, we have already discussed how your 8C will come, because how we are auto-populating our 8A. So whatever ITC of 24-25 getting auto-populated in 25-26 is a carry forward ITC. So basically, while doing your GSTR 9, you have to download 2B of 25-26, and in that 2B, check the invoice date which belongs to 24-25. Well, or already table 8A, you can download from GST portal itself. By downloading table 8A, there you can filter with in filing period of 25-26, you will get your 8C ITC which you are carry forwarding. So that will form part of your 8C. Now this is just an understanding of how the data will flow in table 8, and how the reporting will done, which sir has already discussed about the 8D impact. So suppose you have a credit of 200, out of which only 120 you have reported. Because still we are noticing that there are many people who are not following 2B properly. Basically, the ITC that they feel is not eligible, they are doing net reporting in 4A5. So this is one of the examples. Suppose you have a true in 8A, auto-populated is 200, out of which you reported 120 in 3B, out of which eligible and avail is 60. That will form part of table 8B, because in 6B, eligible and avail both will be there. Ineligible but avail will also form part of table 8B, because in 6B, we first write total ITC, and by way of table 7, we are reducing reversal. In 3B, we claim as per 2B total 4A5, and any other reversal we do it through 4B1 and 4B2. So as the 6B is gross before reversal, that's why even eligible and ineligible both is forming part of table 6B. If out of this any ITC you have claim in next year, then 40 rupees, like it will be parked in 8C carry forward. The ITC which is not reported, like 80 rupees out of 280, nothing has been reported, then you have to report in table 8E. It is a ITC available but not available. Means you are now it has been lapsed 35. Now this is ITC available but ineligible ITC it is. So you have to report it table 8F. So this is how the bifurcation and reporting of table 8 will be. The one which you have reported will go into 8B and 8C. One which you have not reported will form part of 8E and 8F as applicable. Now this is ITC validation check. Your whatever ITC you get in 7J, which is basically table 6 ITC avail, table 7 minus reversal is a net ITC. It will the net ITC which is available will be the ITC which is available for you for utilization during the period. So out of available, whatever you have utilized is going in table 9 of GSTR 9, which is tax payable versus tax paid. If any unused ITC is there, means if your availment is more compared to utilization or due to opening credit balance impact. If there is any unused ITC, that will go into credit ledger balance. So in this way, you can check that whatever you have reported in your GSTR 9 about table 6 and 7, whether it's matching or not. So it's just a cross validation. You can check that unused ITC should. So this one check we do where we match with electronic credit ledger. So what is my opening balance as per credit? What I have availed, less what the utilization, whether it matches with the closing. So opening balance we take from credit ledger. Availment and utilization we take from GSTR 9 mapping to identify closing as per this formula, whether matches with electronic credit ledger closing balance or not. This again, another check again, net ITC, that table 4C of GSTR 3B is your net ITC, which is available after the deduction. So basically how it will be, table 6 of GSTR 9 minus your table 7 of GSTR 9. Here, while matching with 4C, you have to keep in mind in GSTR 9, table 6A1 data is not getting auto-populated, means it's not coming in counting. They have excluded it and then they are not adding. So when you do 4C comparison with table 7J, you will find only one reason for difference is table 6A1. So that you have to keep in mind. Now, this is about the spillover adjustment. Like we were discussing, there will be a cases where ITC pertaining to 24-25 would have auto-populated in 25-26. If those ITC have been auto-populated in 25-26, then you have to report in 8C and 13 because table 8A will automatically consist of those data. Now, one is fresh ITC, which you are going to first time avail. One is here also it may be a case, some ITC you might have parked, which is your closing ECRS, electronic credit reclaim and reversal statement. There may be closing ECRS also, which belongs to 24-25, but you have not availed in 24-25. You are going to avail in 25-26. So if any of 24-25 you are going to reclaim in 25-26, then again that will form part of table 13 reporting. This is specifically given in the instruction. So this time it's not just whatever ITC avail in 2B, you have to be also taking care of opening ACRS and closing ACRS while reporting in GSTR 9. And all this table spillover, basically part 5, are mandatory. Earlier it was optional, now it is all mandatory. You have to fill those details. Now coming to with ITC RCM reporting. So for RCM, there are only 2 tables which deals with it, and it is only in GSTR 9. One is liability to pay tax, and one is ITC, what you claim under RCM. In 9C, it's only rate-wise reporting of RCM which you have to do. Means at what rate you have discharged the tax under RCM, you have to disclose in table 9 of GSTR 9C. Now, liability to pay, you will disclose in 4G. You have to keep in mind whatever liability you paid through 3B in 24-25 will only form part of it. It may be a case while verifying, you might find out you have missed out to pay the RCM. Maybe. If you are paying that through DRC03, then it will be included in 4G. But if you have paid through 3B of 25-26, it will not form part over here. Only what is paid in 24-25 or then that only will come in table 4G. RCM, ITC, we have already discussed. If it is unregistered, you have to disclose in 6C. And if it is a registered supplier, then you have to report it in 6D. And registered supplier, you will get it from 2B. Here, the validation check which you have to keep in mind is your ITC claim should be either lower or equal to what has been paid because it cannot exceed. If it is exceeding, obviously you will get a notice. So you have to say ITC should be lower than what you have paid or equal to. One check. Second check is whatever data auto-populating in 2B for RCM liability, either it should be lower or equal to what you have paid. So this also check you have to take care. Third check, as they have done registered ITC under RCM to be reported in 6D, you have to make sure what is coming in 2B, either it matches with it or it should be greater than that. So these are the check on RCM which you have to do while reporting in GSTR 9. So now over to you, sir.
Yeah. Now the taxes payable and the tax paid, we have in detail discussed the what will be the taxes payable is from your books. Taxes paid, we are saying derived from your GSTR 3B, previous year, current year adjustment. In GSTR 9, table 9, tax paid is auto-populated. The tax paid is auto-populated. In my view, again, the like how the portal has done a carve out of 6A1, there should be a carve out, but the tax payable will be automatically coming from your table 4 in table 9. You have to calculate from both the table 9 and table 14, and you have to see whether those have been exactly paid or not in table 9. So you have both payable column and paid column. Table 9 payable column is editable. It will be coming from table 4. You will have to write the payable. The difference between 9 payable and 9 paid will be 2 reasons. Reason number 1, either you have DRC03 challan or something you have already paid in the previous year. Because current year 9 paid would be coming straight from GSTR 3B taxes paid. Next slide. So this is just a data flow for validation. So you have to ensure that the liability which is there is in table 4, 10, 11, there is one liability. In 9 also there is a payable column. In 9 paid column, ensure these are matching. If it is not, is there a DRC03? Okay. You also have to validate HSN wise reporting. Table 17 deals with outward, table 18 deals with inward. So the HSN of outward in table 4, 5 and 10 should also be compared with the total turnover. This is another reconciliation that you have to do. Like I said at the beginning of the session, the sales register pivot table, when you apply, one of the validation is the HSN wise. Little bit on 9C related validations. Whatever the values that you have reported here in GSTR 9 is matched with 5P and 5Q of 9C. In the first table, which Ashika has explained, derivation of the turnover, your 5P is what you will derive the turnover. That is compared with what is the value which is there in 9. So all the values of 9C is derived from the books. The derived books value is compared with your 9. So table 5 was total turnover. So the total turnover is comparing with 5N plus 10 minus 11. And we all know 5N, they are excluding 4N minus 4G minus 4G1 plus 5M. Right now, by now you understand why I said pardon me for the table numbers. You need to know. So if you have a printout of it, you can easily. So 5N is equal to 4N minus 4G minus 4G1 plus 5M. So that is outward related turnover plus table 10 outward minus table 11 ideally should be matching with my turnover. And the taxable turnover, that means I am now excluding table 5, I am only considering table 4. So the table 4 minus the 4N minus 4G, 4G1 plus 10 minus 11. Now this indicates in table 10 and table 11 of R9, you will only report taxable turnover. If you have missed out reporting some exempt turnover in table 8 of R1, if you have not reported exempted turnover in R1, still you will go ahead and report it in table 5. You will not carry forward any exempted or export without payment of tax, XZ without payment of tax. you wouldn't report it in table 10 and 11. You will be reporting in table 5 only, even though you missed out reporting in your R1. This is another thing you should be aware of. Then further, next slide. The payable in GSTR 9, tax payable is in 9 payable column, 14 payable column. In 14 payable is coming from 10 and 11. So this is compared with table 9 of 9C. Table 9 of 9C. I have explained the different tables of 9C earlier. Yeah. So 12 is the ITC reconciliation. There is a 2-match ITC reconciliation. Eventually, it is matched with 7J. 7J is what I am utilizing or availing. Now that is matched with 2 reconciliation. One is it there in the books of accounts? So opening balance in the books plus current year minus not availed, is it there in the books of accounts is one reconciliation. The one which is there in the books of accounts, is it there expenditure wise? Yeah. How will department do the assessment? Whatever the compliance which has to be done in the law, the same way they would also see whether proper taxes have been paid, whether the tax liability is multiplied turnover by rate. That is what is being compared. So what is that you need to have? Ensure you have working papers in doing all of this. Include the prior period data. So in the previous year working paper, have some calculations, say that these have to be considered in the next year. During the current year working paper, if something has been brought forward from the previous year, have that as a separate adjustment note and carry forward. Have HSN wise classification, because the rate of tax derives only from HSN. Look at all credits in the P&L. Look at the valuation adjustments with especially discounts, financial credit notes. Look at that. There would be a difference in time of supply. Your income computing disclosure standard or accounting standard IFRS versus section 1213 of the GST Act, there would be time of difference. Make those subtle adjustments with the time of supply. Yeah. With this, we have come to end of today's session, and I thank each and everyone for being part of this journey. And any questions we will be happy to take. And this is our WhatsApp channel. We always time to time update users about our GST thing. If you are not part of our WhatsApp, I would request you to subscribe and be part of it. And if you have any questions, you can always ask. Any questions? Some of them asked about Excel and PPT. We will be sharing you the Excel and PPT. You will be getting an email about a feedback form. Once you fill the feedback, you will get a link to download the presentation and also copy of recording of this session. Okay, looks like, yeah, is HSN wise detail mandatory for inward supplies? See, for the inward supplies, the let's look at what is the ask for HSN inward. HSN inward, you are only supposed to give if the total supplies exclude any inward supply exceed more than 10% of the total purchase. Only in that case you need to report. And as of now, that's an optional table, but it's not required every item like printing and stationery, one electricity bill, you don't need to report. Any one purchase which is exceeding 10% of the total purchase. So that means that is only the thing which you need to report it. As of now, this table is optional. Table 14 is also optional. No, table 14, I would say if you have values, you have to report. And if you are not reporting, there is a difference between nil and null. There's always a difference between nil and null. Nil is 0. null is there are no transactions. Null is no transactions. So this is not an optional table. Either you have a value or you have 0. Okay. I think we have answered all. As I said, we will be exceeding certain time, and you now understand why we did not keep the text session. We haven't even walked you through actual data, numbers, and forms, which Ashika intend to do it in the next session. But it is critical for us to understand the entire form contents before we proceed onto it. We have tried our best of the efforts to put some examples to make you understand. I know it would be complicated for those of you who are seeing for the first time, but otherwise I would say if you read the form once, you'll get it. Make sure you get hold of those table numbers and the parts in the various reconciliations so that you don't make mistakes. And even if you make mistake, don't worry. That is why we are here. If you have any notice, we are here to fight your case. No, end of the day, what it is a form. Instead of reporting at one place, you are reported at another place. It's like erroneously you ate curd rice first and later you ate sambar rice. It's okay. Everything getting into your stomach. So as far as possible, try your best. Rest, we are there to take care of you. I should okay, WhatsApp community is full. I think Ashika had shared the old thing. I will give you in a minute the new. Just give us. Yeah, please use this. Ashok sir, I've shared, and everyone I have shared the new link. You please use this for joining. You can click on this link and join. I have shared the link in the chat. Okay, so special thanks to Stephen for managing, coordinating whole of this, and the star of today's session, Ashika, for putting the PPT and walking us all of the detailed thing. Thank you, Ashika, and thank you everyone for your interaction, which ensured that we go in a smooth flow. We are always available to solve any of your queries. Thank you. With this, we end the session.